Welcome to Finpod, your daily financial digest. I'm your host, Evan, and today we're breaking down the moves driving the markets. This episode is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let's get right into it. Avis budget is the talk of the town, jumping over 6% in the pre-market. This isn't about fundamentals. It's a massive, ongoing short squeeze. With high short interest and a thin float, traders are stuck in a volatile loop. Analysts are warning that this is purely technical, not based on the rental car business itself. Meanwhile, Amazon is catching eyes with a 2% lift. The big story here is the company's massive AI infrastructure spending and its push into satellite technology, which investors are starting to view as a long-term growth engine despite the heavy capital expenditure. Then we have ARM up nearly 2%. The company is leaning hard into its new data center CPU strategy, and investors are optimistic about its role in the future of AI-powered servers. Finally, Hims & Hers Health is up over 1%, continuing to ride a wave of optimism around regulatory shifts for wellness peptides and the company's aggressive pivot toward FDA-approved weight loss drugs. Looking at the broader market, U.S. futures are slightly higher today. The main catalyst is renewed optimism around AI-driven earnings, which is helping to offset lingering worries about geopolitical tensions in the Middle East. Oil prices remain a focus, with recent flare-ups in the Strait of Hormuz keeping energy costs in the spotlight. Investors are also keeping a close watch on Washington, specifically the upcoming Senate confirmation hearing for the Fed chair nominee, which could signal future shifts in monetary policy. We're in the thick of earnings season, and so far, the results have been surprisingly strong, with a high percentage of companies beating analyst expectations, which is keeping the overall market sentiment resilient. In the AI economy, the theme for this year is clearly agentic AI, systems that can autonomously plan and execute complex workflows. We're seeing massive capital flows into AI infrastructure, including data center cooling and specialized semiconductor manufacturing. It's not just the big cloud players like Microsoft and Google anymore. The investment is spreading into healthcare and defense technology. The consensus is that while the chatbot era of last year was the spark, this year is about integrating AI into the core infrastructure of the global economy. For stocks in focus today, keep an eye on Johnson & Johnson, GE Aerospace, and Raytheon as they report their quarterly figures this morning. These are massive industrial and healthcare players, so watch their guidance closely for signs of how they are managing global supply chain costs and inflation. Also, look out for Intuitive Surgical, which reports after the closing bell. Investors will be dissecting their robotic surgery volume trends. That wraps up the key moves for today. We covered the volatility in the rental car sector, the broader market's response to AI optimism, and the big industrial earnings on deck. If you found this helpful, please like, share, and subscribe to the channel. Drop a comment if there's a specific stock or sector you want me to cover next time. And remember, for stock recommendations, visit Fintwit.ai. Thanks for listening, and I'll see you back here tomorrow.